the best of Money Matters.
Market View on Money FM 89.3.
Hi, I'm Willie Keng. You are listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch. But first, a quick recap of how we started the day. Singapore stocks opened higher this morning, despite Asian markets trading mixed, as investors await the outcome of the US Federal Reserve's two-day meeting, where it is expected to cut interest rates. In early trade, the Straits Times Index was up around 1.4%. This came on the back of stronger trading across the Singapore blue chips, including the Singapore Banks, Singtel, and Yang Shipbuilding. The benchmark STI closed lower 0.3% at 4,323 points. Meanwhile, Asian stocks have powered ahead this year, with the MSCI's regional index surging more than 20% in 2025, outpacing the gain of about 12% in the S&P 500 index. The Asian benchmark this week also surpassed its previous all-time high set in early 2021, which was helped by a weaker dollar and a strong AI outlook. While analysts say current forecasts are too optimistic, many are also cautious about the impact of US President Donald Trump's tariff hikes. So what are the risks investors should note within Asian stock market, and how will the potential interest rate cuts influence Asian stocks? Let's unpack all of these developments with Too Jun Cheong, dealing manager from Moomoo Singapore. Welcome to the show, Jun Cheong.
Hello, Willie. Thanks for having me.
It's great. Now, let's jump right in here. Just want to get your thoughts here. How has the STI fared so far, and what's driving markets? Were there any biggest movers and surprises that got your attention?
So the STI did have 3 consecutive rate days now after hitting the all-time high last Friday to close off today at 43.23. So I guess the top losers for today's session are GMH as well as the FI Retail Group. Coincidentally, both of them are trading the US dollar. So like you mentioned, the US dollar did fall against the Sing dollar significantly yesterday, and now the dollar Sing is trading at a 1.27 range again. So I guess no surprises for both JMH and the FI Retail Group. The STI counter really that has caught my attention, or at least this week itself, would really be Singtel. So for Singtel itself, it has really been steadily trading sideways, I guess, for the past 2 weeks. It looks like it is, again, at the consolidation phase. And another thing is the defensive nature of communications are back in play again, with a lot of this rotation towards defensive sectors still ongoing.
Yeah, I mean, speaking of blue chip like Singtel, I want to just talk a bit about ComfortDelGro here. I mean, its recent announcement of its consortium with its French public transport operator, they seem to have actually won a contract, bid for a contract to operate and maintain the Copenhagen Metro. So I just want to get a views here. I mean, considering how ComfortDelGro is expanding beyond the Singapore shores in the transport sector.
So I guess for ComfortDelGro's expansion to overseas is definitely a strategic move to grow beyond the limited scale that it can achieve in Singapore itself. So in financial 2024, we do see that about 50% of their revenue comes from Singapore. And this is good because it was down from 57% a year ago. It really shows, I guess, international expansion, although a bit gradual. So the Copenhagen Metro contract is a good step for them, and it could push the company's UK and EU revenue to above 30%, reducing a lot of reliance on Singapore and, in a way, spreading their risk. For me, actually, I've lived in the greater Copenhagen area for about 3 years. So I guess I share some personal insights and experience. For me, I guess, for ComfortDelGro and as well as in Copenhagen itself, ridership will be the key for them in terms of profitability. So while the, probably say it wrong, but Metro Scadet, which is their operator there, reports that the ridership has certainly recovered from their pre-COVID levels. The addition of this new M4 line that has started last year, extending further away from the city centre to the coastline, can really reduce their revenue per mile. So another factor, I guess, in Copenhagen is really this strong cycling culture. The cycling infrastructure there is really good. And over there, when I was there, many people, they are happily to cycle 30 to 40 minutes to work, to school, etc., instead of taking public transport. So this is where it becomes a challenge for ComfortDelGro as well as the profitability in ridership. So even though I guess the metro is running on clean and green energy, bicycle will still be one of their competitors in, say, So it's still good because the contract strengthens CDG's international presence. But managing ridership and ensuring profitability will be a challenge for them.
Right. I mean, if you talk about very localized expansion, for example, to Copenhagen, that's one of the challenges and concerns. Now, if we look at a broader picture in ComfortDelGro, what do you think are the challenges here or the risk where ComfortDelGro has to take? I mean, considering, like you have earlier mentioned, that the percentage of revenues coming from Singapore has actually been gradually declining. That means more revenues coming overseas.
Correct. So as more revenue comes overseas, they actually reduce the reliance just on Singapore itself. So while expanding overseas can come at in a way, some risk for the company, it do allow them to scale up way more because Singapore is land scarce, whereas over in the world, for example, in Copenhagen, it is huge. So, of course, if the metro line do expand to the next M5 and M6 lines, yes, ridership can actually increase and profitability increases. However, the downside for this is really for ComfortDelGro because they are going to be doing the operation side. So this is where they actually have to maintain the operations there. And the difference right now is the extreme weather that could be very different from how they were operating in Singapore.
I mean, moving on from other blue chips, I also want to talk a bit about Keppel. I mean, recently it also announced another agreement with Dell Technologies to collaborate on data centers. I mean, with all things about AI, what are your views here with respect to Keppel's recent agreements?
So many clients tell me that they have missed the AI bull run. And they always like to ask me, what are the next opportunities to come next? And interestingly or not, data centers, they often come up simply because they are, essential infrastructure for a lot of this AI application. So as AI overall becomes more integrated to businesses, so not just your big techs, not just your big companies, but even to our local small businesses, the demand for a lot of this high performance, reliable data centers, I think they will increase. But for data center operators itself, I guess securing anchor tenants such as your hyperscalers, your major cloud providers, or even really big companies, your FMCGs, this is crucial because a lot of these long-term contracts within these tenants, they provide stable, predictable revenue, which also improves financing options for expansion. So Keppel and Dell's collaboration, I guess, they're designed to, combine their strengths. So Keppel brings in sustainable infrastructure and real estate expertise, and Dell brings in their advanced technology and access to client networks. So together, they are definitely looking to build more efficient data centers. And this is probably their way to attract high-value tenants. But for stock prices-wise, I guess it will largely depend on how significant the data center business becomes for both companies. If it grows to a meaningful share of revenue, investors, they are likely to take notice and then reward it in terms of share price. But the main risk still comes from the really high capital cost of starting a data center. Right. If AI, if it does actually slow down, which a lot of people are talking about, these projects could actually take longer to break even or even to be profitable, which would really weigh on the stock prices.
Right. Now, I just want to move out from the region into global markets here. I mean, we have recent US-China TikTok deals. You know, after more than a year of negotiations, the US and China have sort of struck a framework agreement here to sort of hive off the US operations of its social media platform TikTok. What has been discussed so far, and who are the potential investors which we are actually looking at right now?
So right now, there is a lot of talks in Madrid between the US and China. Of course, a lot of different things, your economy, your tariffs, but one of the things that has been thought up is also TikTok. And this discussion has actually been progressing with both sides really looking at exploring the possible sale to a US-based company. So President Donald Trump is also expected to speak with President Xi Jinping on Friday, actually, to complete this deal. The interesting part is actually the deadline for this deal was set today, but the U.S. Treasury Secretary Scott Bessent has indicated that this could actually be extended by another 90 days to allow more time for this finalization. I guess the U.S. ownership of TikTok really ensures that American users' data remains secure and not accessible to Chinese government. TikTok has over 117 million users in the U.S., making it an important, platform for communications, marketing, and even small business sales. So some of the rumored potential buyers actually includes Apple, Google, and Oracle, with Oracle currently seen as the front runner.
Yeah.
I guess owning TikTok gives Oracle access to a large user base and potentially political goodwill, especially with the Trump administration.
Yeah, I mean, speaking of some of the potential investors, some of the big giants here, I mean, what would there be an impact, or what would be the impact if the deal actually falls through, or would that be a chance of that falling through?
I guess the chance of falling through is slimmer compared to before. But let's say if a deal definitely falls through, TikTok could face, of course, the US ban again, similar to what happened earlier in the year where a lot of users just couldn't go into their TikTok account anymore. Actually, that would directly impact a lot of small businesses that rely on TikTok to reach customers and generate income. But at the same time, competitors like Google's, YouTube, Meta's, Facebook will really benefit because advertisers will redirect their spending towards these two platforms. I guess this shift, in a way, if it does not go through, could lead to a boost in the stock performance for a lot of their rival companies as well.
Now, I'm trying to move a bit into Asian markets here. As we have so far seen, Asian stocks have powered ahead this year with the MSCI's regional gauge surging more than 20% in 2025. And the Asian benchmark this week has surpassed its previous all-time high set in early 2021. Jun Cheong, I just want to get pick your brains here. With Asian stocks rally, how do you think the US President Donald Trump's tariff pressure will actually influence or impact Asian stocks here?
Of course, markets across Asia have been going really high now. And of course, it has also been following the US for much of the year. When in April, when everything went down, it went down at the same time because of the tariffs.
Yep.
So on the surface, of course, it looks like a lot of broad gains for the market. But in reality, the performance really varies by sectors. So a lot of these export-heavy companies that ships goods to your US, of course, they did struggle due to tariffs. While I guess sectors that are less sensitive to interest rates, of course, interest rates have still been on the topic, have kind of lagged behind against those who have benefited from the lowering of rates. But one risk that a lot of investors they actually overlook, which you had actually talked about at the start of the show, is actually the foreign currency risk. So, of course, the US dollar has weakened to, right now we are looking at 1.276 against the Sing dollar. So for a lot of investors, if you are just investing into US or even some other overseas market, this can significantly reduce their returns when they do convert it back to Singapore dollars. But I guess all eyes are also on the Federal Reserve's upcoming decision tonight. So, yeah, I guess 25 basis point cut is widely expected, and I would say it's likely priced in. But in the event that a larger 50 basis point do come in, I would say it would trigger a short-term rally for the market. Right. But personally, for me, I guess the bigger challenge with a bigger cut is that it might signal that the U.S. economy is weaker than expected, or there is, I would say, political pressure on the Federal Reserve, because there's a lot of talks about the Fed being not independent now. I guess both scenarios could undermine confidence over the long run. And for Asia itself, the market will likely follow in the U.S. direction. Sectors sensitive to interest rates like your REITs and financials, I guess they are expected to see more trading activity when trading resumes tomorrow morning.
Right. We have been speaking with Too Jun Cheong, dealing manager from Moomoo Singapore. Thank you so much for your insights, Jun Cheong.
Thank you.
Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.